The Pakistan Stock Exchange, PSX, is a stock exchange with trading floors in Karachi, Islamabad and Lahore. In May 2017, PSX was reclassified as an MSCI Emerging Market, although the FTSE categorizes it as a secondary emerging market. There are around 220,000 retail investors on the exchanges, as well as 1,886 international institutional investors and 883 local institutional investors. The Karachi Stock Exchange, one of the PSX's component stock exchanges, was ranked among the world's top performing frontier stock markets between 2009 and 2015, with an average annual return of 26%. There are 540 listings on the exchange, and they are denominated in Pakistani Rupees. Pakistan's economy is ranked 22nd in the world in terms of purchasing power parity and 45th in terms of nominal gross domestic product. Pakistan has a population of more than 220 million people, making it the world's 5th largest country. However, Pakistan's undocumented economy is believed to account for 36% of the country's total GDP, which is ignored when calculating per capita income. Pakistan is still a developing nation. The economy is semi-industrial, with the Indus River serving as a development corridor. Textiles, leather products, sports products, chemicals and carpets, rugs are among the most important export items. Internal political strife, a rapidly rising population and a mixed amount of foreign investment have all harmed the economy in the past. Pakistan is pursuing an economic liberalisation process that includes the privatisation of all government enterprises in order to attract international investment and reduce the country's budget deficit. Pakistan was designated one of the 10 rising economies in a 2016 BMI research report, with an emphasis on its industrial hub. Pakistan's government has forecast that future growth rates will be 5%, one of the highest in South Asia as of May 2021. Pakistani poverty dropped from 64.3% in 2002 to 2.3% in 2018, according to the World Bank. Pakistan's debt outlook has been upgraded to stable by Moody's due to the country's improved macroeconomic situation. Pakistan is concentrating on developing its own EV, biomedical, electromagnetic, smartphone and semiconductor industries. Samsung and Realme have announced plans to open a manufacturing facility in Pakistan. Many new auto sector giants such as France's Renault, South Korea's Hyundai and Kia, Chinese JW Forland and German auto giant Volkswagen are considering entering the Pakistani auto market through joint ventures with local manufacturers like Dewan Farooq Motors, Khalid Mushtaq Motors and United Automobile Industries. ExxonMobil, the world's largest oil and gas company, has returned to Pakistan after a nearly 3-decade absence, acquiring a 25% stake in offshore drilling in May 2018, with preliminary surveys indicating the potential for substantial hydrocarbon reserves to be discovered offshore. According to the Wall Street Journal, as much as 42% of Pakistani's population may now belong to the upper and middle classes, based on income and the purchasing of consumer goods. If these figures are true, or even suggestive in the broadest sense, 87 million Pakistanis belong to the middle and upper classes, a population greater than Germany's. Official statistics also reveal that the percentage of homes with motorcycles and washing machines has increased dramatically in the last 15 years. Because of the rapid expansion of the population in recent decades, a huge number of young people are now entering the job market, despite being one of Asia's 6 most populated countries. Excessive red tape in the past made dismissing employees and, as a result, hiring difficult. Because of significant advances in taxes and business reforms, many businesses are no longer forced to operate in the shadow economy. In 1947, agriculture contributed to roughly 53% of GDP. While agricultural output per capita has increased since then, it has been surpassed by non-agricultural development, and agriculture now accounts for about 1/5 of Pakistan's GDP. In recent years, the country's industries such as clothing, textiles and cement and services have experienced tremendous expansion, such as telecommunications, transportation, advertising and finance. Capital gains on the sale of shares are subject to a rate of 15% even for non-residents, unless the shares were held for more than 24 months. The best place to research equities in the Pakistani market is the Pakistan Bureau of Statistics website. First, with more than 100 regions covered, you can learn more with the Exotic Markets book available on Amazon. Second, you can explore sector and industry intelligence for different countries by going to pervasives.com. If you have an issue in relation to accounting and tax with foreign stocks, you can contact us by going to our website.